Hey everybody, welcome, welcome. Thanks for joining. We'll get started here in about 4 minutes. Yeah, this is our, how many is this, Genevieve? This is our fourth?
This is our fourth, and we have more next week.
It's awesome. Hello, Jason Mercado. Welcome, welcome. Hey, Rita, Valerie, what's going on? Hi, Jason, Janine. Hey, everybody. Give me a couple more minutes. We've got hundreds of people joining. Hello to Janelle Reed. Hi, good to hear from you. Wow, I can't believe it. So many of you that are here. Nicole, hey, what's going on? Rebecca, hello. Let's give it 2 more minutes and we'll get started. Julie, how are you? Carrie, what's going on? Hey, everybody. We need music. You know, Genevieve, can we get music for the next one?
Of course we can get music for the next one.
Anybody got any suggestions? Should we go top 40 or what?
90s for sure. 90s music.
Yeah, 90s. Okay.
Throwback.
All right. We'll give this about another 90 seconds and we'll get started. Hey, everybody. Hey, Lisa, Casey, how you doing? Jeff. All right. Let's start with announcements, everybody. All right. So welcome. For those of you that don't know, a few weeks back at Kangaroo Time and throughout our industry, we had the beginnings of a really tumultuous time with the outbreak of COVID-19 and us and all of you being on the front lines. Our lives were disrupted. So we decided we were not going to bring on any more customers. Our efforts as a company have been centered around customer acquisition and engagement. And we decided it was time to just kind of sideline that, put that away, and come together and put together as much content as we could for our customers. So this is our fourth in a series of many. In fact, we'll be announcing more webinars next week. But as things started to kind of shape up, this became the most critical piece of content that we could share with each of you guys. So today I have Eric Soucia. He is with Danza Dorada Soucia LLP out of Buffalo, New York, our home. And by the way, I'm Scott Lien. I'm the founder and CEO at Kangaroo Time. Let me get started with a few announcements. So first of all, a lot of this has been generated, the interest, the feedback out of our Facebook group. It's called KT Childcare Connect. Again, it's KT Childcare Connect. Please join us. One important element is certificates will be directly sent to you the day after the webinar in email. So we are able to offer certificates only for those who are registered. So if you're here, enjoy the content, you will be getting a continuing education certificate for that. If you have any questions, please enter it into the Q&A area. You'll see it at the bottom here. We received a lot of questions from the webinar, but we'll try to get to, we received a lot before the webinar. We'll try to get to them as time allows. And I think we're going to go the full hour the schedule is we go 45 minutes, then Eric does 15 minutes of Q&A. Let's let Eric get through with his slides, and then we'll allow for Q&A. And I think 15, 20 minutes is kind of the max, and then we'll get back to you with questions. Microphones, just to let you know, your microphone and cameras are off. Only the panelists will be able to speak during the webinar. And the recording, we will be sharing the recording of the webinar via the email after the webinar. So I'm excited to introduce Eric. Eric is a partner at Danza Dorada Soucia LLP, where he specializes in providing audit, review, consulting, and various specialized assurance services. He is going to talk about the CARES Act, which is a $2 trillion stimulus bill that was passed by Congress on Friday. There are many parts to this, but this session will specifically focus on the SBA Economic Disaster Loan section of the bill. Eric, without any further ado, thank you for joining, and I'm going to let you roll. Thanks for joining. We really appreciate having you.
All right, you're welcome, Scott, and thanks for having me. I appreciate the opportunity to talk to everybody. And like Scott said, we're going to focus on the Economic Disaster Recovery Act, part of this legislation, and specifically the Paycheck Protection Act, because I think that is what most people want to hear about, and that's what's going to affect most of you. And to eliminate some confusion, there's two different loans out there. One is the Economic Industry Disaster Loan, which that has been around forever. It's not part of the new legislation. And if you go to SBA's website and try to apply for a loan, that's what you're applying for. So the loan applications for the Paycheck Protection Act don't exist yet. So you cannot apply yet. They're working on it, but don't go to the SBA website and fill out a loan application because you're applying for the wrong loan, which could cause you some problems down the line. So background on this Paycheck Protection Act and kind of why it makes sense, because people listen to it and they say, this is too good to be true. How could they be doing this? I don't believe they're going to do this. But the intent is to get people off unemployment, which the federal government is now subsidizing to $600 per week. The intent is to get people off unemployment and back working. And instead of paying unemployment, they want to pay you via the forgiveness of this loan to keep these people employed and keep your doors open and keep people working. Obviously, the business that you're in, you were affected greatly, but there's still a need for, and that's why you're allowed to keep your doors open. There's still a need for daycare centers around because there's still people, healthcare workers, and, lots of other people that need to go to work still who still need childcare. So I have been working with M&T Bank specifically on this. We've been working together, so I'm going to use our deck that we developed with M&T Bank just to kind of run through this Paycheck Protection Act. So they get a little bit of free advertisement here. So back to the application process program. I think this is really, really important. That's why we put it up at front. So who can make these loans? So the federal government and the SBA realized that they cannot handle the volume of these loans that people are going to be applying for. So they are empowering the banks to make them. So each bank is going to have its own specific application process that is going to be approved by the SBA. So you should be going to your local bank or your local lender, whoever they are, rather than trying to go through the SBA to get them, because that SBA, there's not going to be a process where you go directly to the SBA. They want to channel it through the banks to make it more efficient. That's the only way they're going to get it done and get all of this money dispersed. There's $350 billion allocated to this program that is mandated by law to be dispersed by June 30th. So they got a lot of work to do between now and then. And like I said, right now, we don't even have a loan application. So we'll start walking through the program. Who is eligible? So you had to be in operation as of February 15th of 2020, and you had to have payroll as of February 15, 2020. So basically, anybody that was working and opening prior to February 5th, 2020 is eligible. So the application period, they're going to be taking applications from February 15th, right, which isn't really true because they don't even have an application out yet, but through June 20th. Like I said, all of the funds need to be dispersed by June 30th, 2020. There's some worry that $350 billion is not going to be enough. Everything that I'm hearing is that if we run out of the $350 billion, the federal government's going to kick in more. Because if we run out of the money, that means the program is working and people are putting people back to work. So their unemployment costs would go down a lot. So they're just kind of planning on shifting it from one pocket to the other. There's nothing in law about that yet, but that's what everybody in practice thinks is going to happen. So another requirement, which is a size requirement, you have to have less than 500 employees. You have to be considered a small business to apply for this. That probably covers everybody here. I don't think anybody's got more than 500 employees. So we'll talk more about the calculation later in the deck on how you get it, but the maximum loan amount is calculated based on your trailing 12 months average payroll cost as is defined in the bill. So you got to calculate what your payroll costs were over the last year, divide them by 12 to get your average payroll cost, and then multiply that by 2.5, and that would be your amount you were eligible for. So if you had $100,000 a month in payroll costs, you'd be eligible for $250,000. The maximum loan amount is $10 million under this. Again, I'm not really sure who's on here, but most of the people are going to be well underneath there. There are some special rules for seasonal employers, but we don't need to really get too much into that today. So here's the definition of payroll costs in the bill. So this is what you use to calculate your maximum loan amount. So it's any salaries or wages paid, cash tips, vacation payments, allowance for dismissal or separation. The two big things that are included in payroll costs, which you normally wouldn't think are payroll. So healthcare benefits, including insurance premiums paid. So if you pay any healthcare benefits for any of your employees, that is included. And if you have any retirement benefits, individual retirement accounts, 401ks that the company contributes to, that's eligible. And payment of state or local tax assessed on compensation to employees. Everybody's still trying to figure out what that means. I think that means unemployment taxes paid is a state or local tax assessed on compensation to employees. So I think that would go into your calculation. So like we said, it's we're going the wrong way. All right, so payroll costs that can't be included. So anybody that makes more than $100,000, you're capped at $100,000. So if somebody makes $150,000, when you're doing the calculation, you can only use $100,000 of their $150,000. Social Security tax and things like that paid are not eligible. And anybody, if you have any people that reside outside of the U.S. That are on your payroll, they do not count either. And then you also cannot count the qualified sick or family leave wages for the credit under the Families First Coronavirus Response Act. Different part of the act. If you have somebody that works for you that got the coronavirus, there's special credits and benefits you can get for that. However, you can't include them in this calculation as well. So now that we got our theoretical $250,000 loan based on $100,000 in payroll costs, now we get into what we can use it for. And you can use it for any payroll costs. You can use it for healthcare benefits, employee sales or commissions, payment or interest on mortgage obligations if you have them, rent, utilities, and on any interest cost and any other debt that they were incurred before the period. So to the extent that you pay those costs with the money, the monies will be forgiven on the loan. So there's some certifications that you need to make. So the way that the law reads is the law says that you have to be negatively impacted by the coronavirus, the shutdowns, and the current economic climate to apply for these loans. So I think every business just about has had a negative impact. So they're assuming that everybody is going to apply for these loans. On all of the projections and everything I see, they think that every small business out there that is under 500 employees is going to request money for this. So you got to sign a waiver that says we were negatively impacted. You get a lot of questions about like how you're going to have to prove it. That's not part of the bill. I think that they're just waiving that because they say, you know what, like everybody's been affected. This is going to be difficult enough to manage this process. So we're just going to take their word at it that they have been negatively affected and move on. So you have to acknowledge the funds will be used to retain workers and maintain payroll or make payments, lease payment, utility payments. So you have to acknowledge the fact that you understand what this money is supposed to be for, and you really have these things. So it's to prevent somebody from going and getting the loan and then just kind of shutting down shop and calling it a day. So they want you to acknowledge that you understand what the money's for. The eligible recipient does not have an application pending for a loan under this subsection for the same purpose and duplicative amounts to receive. Again, they're worried, concerned about administering this program. So the one concern was we want to make sure that somebody's not applying to multiple different banks for the same financing because we're not going to be able to figure that out until it's too late. So they just put this in here to make sure you represent that you don't have another pending application somewhere. That's important because you need to understand if you go to a bank and make an application and things aren't going well, they're not moving as fast as you want them to, you can't just go to another bank and get in and apply again because it may cause you some problems down the line because you have multiple pending applications under the same loans. And, during the period, this is just, during the period beginning on February 15th and ending on December 31st, 2020, the eligible recipient has not received amounts under this subsection for the same purpose and duplicative amounts. Same thing. If you apply and get a loan under this amount, you can't go somewhere else and apply again for more money. All right. So the requirements and fees, these are changes from normal SBA. So normally when you get an SBA loan, the owners need to sign on and personally guarantee the loans and secure the loans with all of their assets. So all of these loans are going to be non-recourse and no personal guarantees for the owners. So if something happens disastrous, and you can't pay the money back, there's not really any recourse for the SBA to come back to you for it, unless you committed some kind of fraud. But, there's no PGs on it, and, they can't come and take the assets of your daycare centers. They've also waived the fees. One of the downsides to SBA loans is that the fees are usually pretty big. So they waive all the fees with respect to these loans as well. Deferrals of payments on these loans. They're required by law to defer payments for 6 months on these loans once you get them. Some lenders are doing up to a year. Basically what that means is you're going to get the loan. There's a forgiveness period that we're going to do a calculation in, which we'll get to later. And you won't have to make any payments on the loan until the forgiveness period is up and the calculations are done. So it's basically all principal, interest, and fees are waived for the first 6 months. All right, so let's get into the loan forgiveness. So an individual or entity that is eligible to receive a covered loan for eligible forgiveness of indebtedness of the loan equal to the sum of the following costs incurred in the payments made during the 8-week period of the date of the loan origination. So I know this is going to get a little wordy and a little technical, but the date that you get the loan is when your 8-week period starts. So you get the loan the following 8 weeks. We need to keep track of all payroll costs, any payments on these covered mortgages, interest expense, rent, utilities, all of these things that can be forgiven. So this is the 8-week test period that we need to start accumulating all of these costs and just kind of monitoring it to see where you are. Their intention is to get you to hire the people back, because to the extent that you hire them back and you're paying payroll, the loan is going to be forgiven. So that's the intent of this thing, is to, you to raise your payroll costs during that 8-week period so you get all of this forgiven. Couple things is that, the interest has to be on a loan that was made prior, to the enactment of this, so prior to 2/15/20. And they're also going to be looking at your lease obligations and your rent obligations to make sure, A, you're not prepaying rent during that period, and to make sure that the current rent payments that you're making are from a lease that was enforced prior to this. They want to make sure people aren't going and changing their leasing agreements to pay a little bit more during these months, or saying, all right, I'll pay you 4 or 5 rent payments during these months. And these are things, all of these things right here, these loan forgiveness numbers, at the end of the day, you're going to have to submit a package to your bank to say, here's everything that should be forgiven, and they're going to give it to the SBA. And the SBA is going to audit it. I don't know how detailed they're going to look into it. And they're going to cut a check to your bank for whatever the forgiveness calculation was. So, in our example, if we had a $250,000 loan, if we had $200,000 of, costs that were able to be forgiven during the 8-week period, federal government, SBA, cuts a check for $200,000 to the bank. Then your $250,000 loan is now a $50,000 loan. And all right, here's some of the documentation that they're going to require for forgiveness. Documentation verifying the number of full-time equivalent employees on payroll and pay rates, including payroll tax filings reported to the IRS, state income tax, unemployment insurance filings. All right, so this is important because they're going to look to your actual payroll reports that you're going to have to provide them. In the borrower's, the payroll has to be in the borrower's federal ID number for it to count, right? So there's, some of you may have PEOs or leased employees where the federal ID number is the leased employees company. They're working through this. They're assuring us that they're going to figure this out, and most people are going to count. It wasn't an intention to cut them out, but just a note for any of you that have that situation out there that you got to watch that. And then documenting canceled checks, payment receipts, transcripts of accounts, basically, all kinds of anything that you have that can prove that you've paid these expenses. Copies of canceled checks, loan documents, covered, copies of leases and utility payments. The better prepared you are, the smoother and easier it's going to go. And then they're just going to make you make a certification to say that, all of this information is true and correct. And, any other documentation the administrator determines is necessary. Like I said, this is going to be administered by the banks, so I expect everybody's experience to be a little bit different, depending on what bank they're dealing with when it comes to these things. So the timing of the loan forgiveness decision, they have 60 days from when you submit the information to them to make a decision to let you know how much money they're going to forgive. And you obviously are going to be able to, argue that if they're disallowing some costs. But so that's their timeline. So you're not going to have this loan outstanding out there that's, accruing interest for a long period of time. So theoretically, you get the loan and you have 8 weeks to accumulate these costs. At the end of the 8 weeks, you immediately submit your application for forgiveness. So you're looking at the maximum of 60 days after that. So you would have the money outstanding before forgiveness for 4 months. Taxability, this is a big benefit. So normally cancellation of debt income is subject to income tax. They've excluded this cancellation of debt from being taxable. So, you know, this is the injury disaster loan. I don't really want to get into that. I'd rather talk a little bit here more about the forgiveness calculation, because I think that's important. All right, so what we talked about is this whole thing is based on full-time equivalent employees and the need and want for the government to put everybody back to work and get these businesses back open and running. So, you know, there is as part of the forgiveness calculation, you're required to calculate, and there's a couple different calculations, calculate your full-time equivalent employees prior to the cover date, which is February 15, 2020, right? So they're saying you have to look back, you have to calculate what your average full-time employment is, and that's what we'll call your baseline full-time employment. So in order for you to get 100% forgiveness of all of the expenses that you paid during that 8-week period, you need to get your employment back up to that level, either immediately or by June 30th, 2020. So there's a calculation during that 8-week period that you have to calculate your full-time equivalent employees. And that number has to be more than or equal to what it was prior to December 15th, 2020. So say we had 10 full-time equivalents prior to all this happening. Now during that 8-week period, we only had an average of 6 full-time equivalent employees. So the math that you would do is it's 10 divided by 6. So you would only get 60% of your costs forgiven, unless at June 30th, 2020, you're back to the 10. So it's kind of like they're giving you some time. They're saying it's either, you know, a percentage of your actual during that period to your actual before, or, you know, the get out of jail free card is have everybody back to work by June 30th, 2020. There's also one more reduction calculation. They're saying that they're going to allow you to reduce people's salaries and wages by 25%, but any more than that, and there's going to be a penalty for that in the forgiveness calculation as well. So, you know, a big thing during this time is a lot of companies that were staying open went to their employees and said, we want to keep you employed. You have to take a 30%, you know, we don't want to lay people off, but everybody's going to have to take a 30% pay cut. And they say they're okay with that to the extent it's 25%, but that's all they're going to allow. If you cut deeper than 25%, they're going to reduce your forgiveness amount by that amount. So that is pretty much it on the Paycheck Protection Program. I know I ran through it kind of fast and I didn't get super detailed in the calculations, but I think that that's just about everything you need to know to go to your banks and go to your people and, you know, talk to the representatives at the bank, talk to your financial people to help you calculate what you're eligible for, and kind of get some idea on the payroll calculations as well. I am sure there's probably some people that have some specific questions out there. We'll get to those in 1 minute. I'll go over the SBA's economic injury disaster loan real fast. I really don't. This is really, let me see. I think I got some different resources here we can look at. No, maybe not. No. All right. Well, just know that. Oh, here's one. All right. Sorry, guys. So the economic injury disaster loan, like I said, this is the one that's been out there forever. Anybody that's in a federal disaster loan, which most of us probably are right now, are eligible for this loan. It's a different loan than the Paycheck Protection Act. It is not forgivable. Purpose of these loans are assist in working capital needs, pay fixed debts, payroll, accounts payable, and other bills that could be paid had the disaster not occurred. So you can get both of these. It's complicated because you're not allowed to double dip. So if you get the Paycheck Protection Act, you need to show that there's a need outside of payroll to get these loans. So if you can prove that, you're eligible for it. It's up to $2 million with terms up to 30 years. Interest rates are at 3.75% for small businesses, and a little bit lower than that for not-for-profits. Just like I said, just about everybody's eligible, provided that you're in the disaster area. There's no cost to apply. There are, however, fees for this loan. The fees aren't waived. The personal guarantees aren't waived, and the requirement to pledge all of your assets is there on these, and they will also make you put up your house on these loans as collateral. So these ones, it's there if you need it. It's available, but I would recommend sticking with the Paycheck Protection Act to the extent that they work for you, and staying away from these loans. I think that's probably all we need to talk about. I know I got through that faster than we anticipated. So,
Eric, that's more than okay, because we have 116 questions and counting. So let's start to tackle those. And I think, if we go over 15 minutes, this will give you a good 45 minutes. Sorry to commit you to so many questions.
Mm-hmm.
Let's try to work through these. Can you see the Q&A queue right now?
I cannot. Hold on, let me grab it.
And one thing I just wanted to mention, that the presentation and a recording of the webinar will be sent in the follow-up materials, and we'll send that out tomorrow. So just wait for that in your inbox.
Okay. All right. So I got the Q&A. So how do you want to do this, Scott? You just want to start running through them?
So Scott, I've been monitoring it. So one common theme that keeps coming up is are nonprofits available, and are churches able to participate in this?
501c3s are eligible. I believe if somebody has a non-501c3 not-for-profit that they want to ask me specifically about, let me know. I mean, most of the people are 501c3s. The churches, I'm not sure. That's an interesting question. I haven't had that one before. I know they specifically excluded like 501c7s, which are like country clubs and private clubs and things like that. But so the regular 501c3 not-for-profits are eligible.
Hey, so we'll do a follow-up on churches
Okay.
religious organizations, House of Childcare are eligible. Those are
Yep.
501c3s. But yeah, let's do a little digging and we'll get a better answer out afterwards.
And Eric, one question that seems to come up a lot too is the actual application available yet or not?
It is not. And like I said, so the banks, the federal government has gone to the banks and said, you guys need to manage this for us. So your bank is going to be your quickest way to get this loan. So contact whoever your bank is, and the application process is going to run through them. The SBA is anticipating, having their application done in maybe 2 to 3 weeks. M&T Bank thinks theirs is going to be done in 3 days. And I think some of the smaller banks are going to be somewhere in between there. So, the fastest. So the economic injury disaster loan application is the one that's on the website. So the second one that we talked about is the one that's up there. A lot of people are applying for that loan thinking they're applying for the Paycheck Protection Act, but they're not.
Okay, thank you for that. And one question that's been coming up too, are part-time employees eligible for this? And can you define what a full-time equivalent employee is?
All right, so part-time are eligible. Full-time equivalent has multiple different definitions. I think provided that you're consistent with your calculation on it, and it's on an hourly basis. So anywhere between 30 hours a week to 40 hours a week is, considered a full-time equivalent. So as long as if you're going to use 30 hours a week for your calculation for your base time full-time equivalents, you're going to have to use 30 hours a week in your calculation, for your 8-week period test rate or your June 30th test rate as well. And I think they didn't specifically define it in the bill. So as long as you're consistent between the two of them, it's going to work out the same way because you're comparing one to the other. So I've been using 40 hours a week as a full-time equivalent, but I've seen people use as low as 30.
Hey, Eric, I've got one here. So many of our centers take CACFP, which is Federal Food Program. So they get reimbursed based on the number of meals that they dole out in their center. Mm-hmm. Is that part of the equation with expenses?
No, the only expenses that matter are the payroll, utilities, rent, and interest costs.
Okay.
So those would be excluded from the calculation. For the Paycheck Protection one side of it, if you were applying for an economic injury disaster loan, it'd be interesting. I'm not really sure how they would treat that.
Yeah, I think that's just like everything else. It's lost revenue. So like the expense equation, super important that you are accounting for those expenses.
Yeah.
So Eric, somebody asked if family childcare providers are eligible for the loans. So if you can go over like the criteria to be eligible for the loan.
Yeah, so FCCs, family childcare homes, are essentially childcare homes that are licensed for either 6 or 12, depending on the licensing requirements, and or this. So they are for profit, just so that just to give you a little context.
Yeah. So the way that the bill is written, anybody who owns a business. And I'm glad to ask this question because I skipped something. So if you own a business and have income generated from it, self-employment income, it's eligible. So Scott, if you owned one of these and you had no payroll and it was just you, and you made $100,000 a year, that $100,000 would be eligible to get a loan again. So you take the $100,000, divide it by 12, with that 8,333, multiply it by 2.5. So you'd be eligible for like 25,000 under this. How they're gonna figure out the forgiveness on that, is beyond I have no idea, and I don't think anybody knows, because it's not real payroll costs. You know, if you have employees, it's easy to say, all right, I paid this to my employees during that time. But, you know, as a self-employed person, it's a little bit more difficult. So,
Eric, that brings about a real interesting question. Sorry to interrupt you. So in these times, is it your opinion that there will be kind of like a super kind of liberal forgiveness criteria with things like this? I mean, I know you're speculating, but can you maybe expound on that?
I don't, like I said, everybody's experience may be different, because they're going to be dealing with different banks. So the banks are going to be, right. So say we go to M&T Bank and we get this loan for $250,000. We go back to M&T Bank and we say, here, M&T Bank, here's the proof of our $250,000 that we spent during the 8-week period. They submit that to the SBA, and the SBA cuts them the check for $250,000. So in this instance, you know, the bank is probably incentivized to be liberal on the calculations, because the SBA is cutting the check back. You know, the federal government's giving them the check, and it's money that's spent already. You know, it's in the budget. So I don't think that they're going to try to, you know, hurt anybody here. I think it's bad PR for everybody involved if they get real aggressive on these things, on the forgiveness piece of it. So I mean, they kind of clearly define like what's eligible and what's not. And I think as long as you stay within those boundaries, I think they'll be pretty liberal about, you know, how they handle these things. Plus, they're mandated, you know, within, 60 days to give you an answer. So, you know, and everybody's going to submit these things immediately after their 8 weeks are up. So how many millions of these things are they going to have to process at the same time?
Yeah. Eric, any thoughts on the $10,000 grant, the AIDL grant?
So that's part of that's part of the second program. So my understanding, I haven't spent a lot of time on this. So my understanding is that if you apply for the economic injury disaster loan and say you need $10,000 immediately, they will front you $10,000 of that loan. In the event that you're unsuccessful applying for the loan, that amount is forgiven. And my understanding is if you are successful for the loan, it just becomes part of the loan. So I don't think it's just a straight up grant. You know, I think it's an advance on the loan, but if you don't get the loan, it turns into a grant.
I see one is Chase Bank offering this loan. Yeah, every bank, Eric, will be deploying these funds or processing these. Hey, Eric, just real quick, 1 minute. What is the incentive for the bank? So your banks are incented to deploy as much capital as possible, right?
Yeah, the banks are getting a 5% fee of all advances that they make. So they get a 5% fee. I shouldn't say that. It's a floating scale depending on how big the loan is, but you know, for most of them, it'll be like a 5% fee for everything that they loan. Plus, they're getting the interest on it, and in some instances, the interest paid to them by the government is going to be higher than the interest they're charging you. So the interest, you know, that's the bank's incentive. But to be honest with you, the banks are overwhelmed. The bigger banks that are going to be ahead of this already have lineups and of people that are applying. Right, we probably have 100 of them in our office already, and the banks are not accepting applications from non-bank customers at this time, for the most part. Right, so they're saying we have to take care of all of our customers first, and then if you're part of a small bank who is 2 weeks behind, and you still haven't, you know, gotten it yet, then we'll process for you. But, unfortunately, the people that are already banking with the big banks are going to probably be, ahead of the curve on this and getting their money first.
So that banking relationship's important. So if you have multiple banking relationships, do shop and look for the best opportunities, the most expedited queue that you can enter into.
Yeah, that's the key. Is really, everybody's going to be getting the same loan. The application process is a little bit different. I've seen some really aggressive documentation requirements from smaller banks. Like, why do you need, personal financial statements and 3 years of tax returns and 3 years of financials to write a loan that's 100% backed by the federal government? And then, the bigger banks, their documentation list is like, a copy of your last quarter's 941, which is your payroll report, last year's financials, and that's it. So it's gonna be different depending on who you're dealing with.
I just wanted to get some clarity around the part-time employees. So part-time employees are covered within the equation, within your calculation. Doesn't matter. You had said something about number of hours of full-time. So I think in most states is any more than 32 hours. Is that right? Or
yeah, it's somewhere between 30. I've seen as low as 30 and as high as 40 in calculation. So, if you have a number that in your state that's what they consider, maybe for unemployment, maybe use that number. That's probably, but as long as you use the same number on both sides of the equation, it's really not going to matter. So do you need clarification on how to calculate those full-time equivalents?
Sure.
All right. So if we had, say, 7 employees that, all worked 10 hours a week. So those 7 employees would be a total of 70 hours. I would just divide that 70 hours by if 32 was your baseline in that state, divide the 70 by 32, and you would have 2 point whatever full-time equivalents for that period they would count towards.
Hey, okay. Thank you for the clarity there. I got a real good one that I like from Camille Sage. Since there are so many questions, my question is, her bank notified her this morning to advise her that a majority of the employees had already been put on unemployment, and that she may not qualify for this. I agree with her. She says, I find this hard to believe. Is that something you're willing to comment on?
Yeah, that's, I can tell you that's not in the bill anywhere. Whether you put employees on unemployment right now is irrelevant. It's really, the whole point of this is to get you to hire them back, right? The whole point of this is to get full-time, to get your employment back to where it was February 15th by June 30th. So you could theoretically lay everybody off and hire them back on June 30th and get 100% of your payroll costs forgiven, but your payroll costs would be zero, right? Because you didn't have anybody, but you would still get your rent and your utilities during that period forgiven.
Eric, should this affect any finance that's already kind of in flight? So if I'm growing my business and I'm trying to obtain another loan for a new center,
yeah, it should,
because many of the entrepreneurs.
Yeah, it should not affect anything that you have in progress already. It's going to be a loan that, for the most part, is meant to be forgiven. And if it's not forgiven, I don't know. Did we talk about if it's not forgiven, what happens with the portion of it that's not forgiven?
We didn't. I think that'd be great to cover.
Okay. So the portion that isn't forgiven at the end of it turns into a term loan for up to 10 years at an interest rate less than 4%. So the terms are really advantageous, even if you don't end up getting it forgiven. They're really friendly terms.
And then once the loan's received, how long does it generally take to receive funds? I think the goal is 2 months, right?
No, so the way that the bill is written, it says that once they receive your application, the SBA receives your application, they're required within 15 days to approve or deny your loan. I don't think there's going to be very, very many denials. So they have 15 days to approve your loan. And then I think it's something like 15 days after that to fund. But 100% of this money has to be doled out by June 30th.
Eric, one good question that came through is to apply for this loan, does the business have to be short on money in their bank account?
No, right at the beginning, we talked about what the requirements were, and they just require you to sign a rep that says that we have been financially disadvantaged from the current economic environment due to COVID-19.
And can people apply for both SBA and EIDL?
You can, but it's tricky because you have to. I would go now. So I assume that means the Paycheck Protection Program and the EIDL. So I would go for the Paycheck Protection one first because that's the one that's going to be forgiven, and then the EIDL after. Reason being is that if you get one, it's tricky to get approved for the other one because you have to prove that there's need even though you already have the other one. So if you get the Paycheck Protection Act one, then you could go to the EIDL and if you can still prove that there's a need even though you got the Paycheck Protection loan that they will approve the EIDL. But if you go to the EIDL first and then they say, well, you don't need the Paycheck Protection because we just gave you this EIDL loan, then you just lost out on all that money that could have been forgiven.
Here, I think we've somewhat covered this. I think the intention of the Paycheck Protection Act is to bring people back. So many of our centers and many of the folks in my cohort wanted to make sure that they protected the business and they made cuts very fast. So they have people that are on unemployment. So if they bring people back, do you see a lot of issues with governance and compliance and forgiveness? Because, they've had people that were off and then they bring them back. There shouldn't be any real issues there, right?
No, I don't. I think the issue that you guys are going to have in reality is that now with this government subsidy on top of regular unemployment, these people may be making more money at home, right, than they are working. That $600 bonus doesn't go forever. So I feel like there's going to be a big gap in the unemployment where until that extra 600 runs out, it's going to be difficult to get people to come back to work.
I agree. So I have one here on, I think I know the answer. I just closed on a building and my first payment is due in April. Will I qualify since I paid rent beforehand? Isn't the historical rent part of the equation of your max loan?
No, so no, it's the payroll cost is just the only part of the equation of the max loan. So the rent is a problem because it states that, this is what it states. It states that in order for the rent to count, the lease has to be enforced prior to 2/15/20. And so the mortgage might count, if that person owns the building, the mortgage interest might count for the forgiveness period. I'd have to look at that. I'd have to look back at that. But they're basically saying, you know, the way they set it up is they don't want people to try to game the system by you know, buying new buildings, by, you know, changing their leases, by renting new properties and then getting forgiveness of it. So was the intention, but it's definitely going to have some unintended circumstances in situations like that. Like, you know, we have a client who was supposed to move in May, and they're putting it off until August just because their rent is not going to be, they're not going to be able to use the rent for forgiveness during if it's during that period. So they're going to delay their move.
Eric, another question that came through is, can you qualify for a loan if you owe back taxes or the business has a tax lien?
I believe so. There's nothing in the regs that say you can't qualify, but you know, I would have to ask. You know, I would go to the SBA for that, and see what the general SBA requirements are. So all of the normal SBA requirements are still in force, other than the personal guarantee, the pledging the assets, and the paying the fee. So those are the three things they changed from SBA's normal requirements. So if you know, a tax lien was in the prior regulations, it would still be there.
Eric, what governance makes the decision on forgiveness? Is it actually, it's the SBA, right? Not the bank.
I mean, personally, I think at the end of the day, it's the SBA cutting the check. So your bank is you're gonna supply the forgiveness to the bank. I think the SBA is going to empower the bank to do the audits on it because they're not going to be able to do it, and then the bank's going to submit for payment from, you know, the SBA. So I would say I would think it's going to be the bank, to be honest with you, because what will happen is that, you know, this is going to be happening very quickly, right? The SBA is just going to take whatever the bank says and say, okay, with the right to go back and audit it later, right? So if the bank submits for repayments that are unfounded and the government later comes back and says, you owe me money, they're not going to be real happy. So I think it's going to be more of the bank is going to be running that process.
And Eric, so I got a couple of questions here on if you're refused by one bank, can you apply at another? I think this goes back to the, each bank will have their process, some probably more stringent than the others with different interpretations. Yeah. So I'm thinking the answer is yes, but I'll just confirm with you.
Yeah, the answer is yes. It just says you can't have two pending applications for the same program. I can't imagine like you would be refused from a bank because it's pretty, they're not really underwriting these things. There's no personal guarantees. The federal government's backing it. So, unless there was a technical issue, and the technical issue is, right, what do you have to be eligible? You have to be affected, which we all were. You have to have less than 500 employees, which we all, and I assume everybody here does. And you have to have payroll as of February 15, 2020. So provided that you hit those three marks, you're eligible for the loan.
Hey, technical question on that came up was, what if an entrepreneur takes a member draw or a draw rather than kind of like a W-2 payroll expense? How do you account for that?
Yeah, my understanding of the way it's written, and everybody's understanding, it's not super clear, is that as long as the owner is providing services for that payment, they can count up to $100,000. So if you were an investor, right, in a daycare and you didn't go there every day, you weren't working there, it would not be eligible. But, you know, if it's for services provided, it's eligible.
That's great. Okay, so, and I haven't really vetted this, but in a scenario where the coronavirus scenario continues into May and you are unable to hire back a majority of your staff as they don't feel comfortable working, what happens then? Can one just submit only the rent and utilities expenses and pursue that type of loan? Yeah. So let's just, let's kind of like take on the apocalypse scenario. And I see this, my wife's a healthcare provider and they have people actively calling in, refusing to come to work. At a time where they need to be most staffed, our childcare providers are on the front lines. What do you see there? Is it one of those where you just need to hire staff? And
yeah, so right, if you don't have your employment back up by June 30th, so say you were 10 full-time equivalents before that, and June 30th you're only at 2 full-time equivalents because nobody wants to come back to work. You would be forced to use the average full-time equivalents during that 8-week period over the average full-time equivalents prior to that. So if you had 2 full-time equivalents during that 8-week period and you had 10 prior to that, you would only get a 20% forgiveness of whatever you paid.
Got it.
Does that make sense?
Totally. 100%.
Okay.
Eric, I think so a lot of the questions left. Everybody, thank you so much for joining. We really appreciate all the questions. A lot of these are technical, and we're going to take these and try to feed back answers as they come about. Some of them are unemployment. Genevieve, do we have a plan to do some regional unemployment content coming up? I know I just talked to Heather today. That's her specialty. She wanted to do some unemployment content at the federal level, which we did before. We'll get to that sort of content. Eric, any follow-ups for you? Are you currently, I know you're helping Kangaroo Time with our loan process. I know that you're helping one of the largest franchises in the country when it comes to the beauty market. Over 1,000 locations. You're definitely one person, especially in this region, that can help. Are you doing this nationwide?
I mean, we have clients all over the country, so to that extent, we're definitely doing nationwide assistance. We've put together we'll call it a local coalition of myself, Lumsden, so my firm, Lumsden and McCormick, Hudson and Ross, and another law firm along with Jack Greco are going to kind of put together a group to help small businesses out with these things, kind of just trying to, come together as a community because, and help, a lot of these businesses, right, that really need the money, but the dollar amounts are small, so they can't necessarily afford to pay somebody to help them do it, which is, so we're trying to, put together webinars and things like these to help everybody through the process. There also is there's some companies out there that are stepping up and assisting small businesses get these loans and helping them with the banks. I don't know exactly how it works, but I know they're getting a part of the bank's fee for doing it. So, it's a no cost to the company. Like I said, the bank is 5%. They've negotiated with these certain banks to share in the fees of them. So there's some other resources out there, to help. And I would try to find out what those are and give those to you, and you can push those out.
For sure.
So,
okay. Yeah. We're putting resource lists together for everybody. We'll follow up with everybody on email. We'll push those out. And Eric, I think I think as we kind of get into a rhythm or cadence of understanding what's going on with the banks, there might be room for a follow-up session. So no pressure, but let's maybe look at a reboot here in a couple weeks. Everybody,
Okay.
thank you. Again, we will send out certificates and follow-up emails. You'll probably see them in the morning. Genevieve, any other announcements before we sign off?
No, a copy of the presentation, the recording of the webinar, and the certificates will be all sent in an email tomorrow. So watch your inboxes for that. And join our KT Childcare Connect group on Facebook. We'll also send a link to that as well. Thank you all so much for joining us.
Thanks, everybody. Really appreciate it. Thanks, Eric.
Okay.
Well done. Well
Thank
done.
you. You're welcome. Thanks.
Guys, have a good one.
You
Stay
too.
well.